All right, what's up, guys? Today I'm going to be talking about investing and timing the market. So, anyone who's not invested in the stock market usually has the same question: is now the right time to invest? This is a legitimate question, especially for someone who's never invested before. They don't know exactly what they're doing, they don't know how safe the market is, they know the market can be volatile, and to most people, the stock market investing just seems like a game of chance. If you get in at the right time, you make money. Think about all the catalysts coming up that people are talking about. We have an election coming up in November. We just went through a global pandemic, unlike anything in modern history. Economies across the world had to close for an extended period of time, and they're just now beginning to reopen. No one knows if this was just a one-time thing or if this is how life is going to be for the next several years. I'm going to show you a chart. This is a chart of the Dow Jones Industrial Average. For those who do not know, the Dow Jones Industrial Average, also known as the Dow 30, is a stock market index that tracks 30 large, publicly owned blue chip companies. Blue chip is a nationally recognized, well-established, and financially sound company. Blue chips generally sell high-quality, widely accepted products and services trading on the New York Stock Exchange and the Nasdaq. So the Dow basically gives an overall sense of how stocks are doing in the market in general. As you can see, the stock market has a common trend: up. Listing some of the crazy things that happened over the last 100 plus years that are on this chart include World War I, which is number 19, World War II, which is number 44, the Vietnam War, which is number 69, 9/11, which is number 106, the Great Inflation, which is number 70. For those who don't know, during the Great Inflation, inflation began ratcheting upward in the mid-1960s and reached more than 14% in 1980. On average, today inflation is about 2%. These are just some of the events that happened in the last 100 plus years, yet the stock market continues to move up, and it always will. This is because humans keep innovating, the population keeps growing, and whatever else you'd like to attribute to businesses succeeding. So what does this mean for you and I? I'm not saying you should run and put all your money in the stock market, but I will say a few things. There will always be inflation, which is the constant devaluation of your money from more money being printed. So sitting on a lot of cash for extended periods of time is not a good idea. When you look at stocks' performance versus other investments such as gold, bonds, and CDs, stocks outperform in the long run. Stocks are also much easier to buy and sell versus something like a real estate property. Real estate can have nice returns, but you could get stuck with a property for years if you can't get the right price. The bottom line, timing the market doesn't work. People may get lucky here and there, but it's not a long-term strategy. If you want to be rich, you need to be invested. Even in the years the indexes that track the stock market have had negative returns, there are still stocks that increase in value or even double up and triple up. The goal of investing in stocks is to purchase these great companies at great prices. There are always stocks worth buying, so your goal should be to learn how to find them. The power of compound interest is greater than most people think. I'm going to walk you through 3 different examples of people investing. Rachel initially invests $10,000, but then invests $5,000 every year from ages 25 to 65, so 40 years. Brian initially invests $10,000, but then invests $5,000 every year from age 25 to 45. So he does the same thing Rachel does, but instead of having it for 40 years, he only does it for 20 years. And then Luke initially invests 10 grand, but doesn't invest anything else from ages 25 to 65. So he also invests for 40 years like Rachel does, but he only invests the initial principal amount. At the end of each individual's investment, Rachel's going to come out with $2 million, $2,003,479.40. Brian is going to come out with $311,840 or $311,840.61. And Luke is going to come out with $314,094. This example should illustrate to you the main point I'm trying to make about stock market investing. It doesn't matter what your initial investment is. It doesn't matter. The only 2 things that matter are consistency in adding money and the time duration that you're invested. You should be invested for long periods of time, and you should be always investing, always adding more money. That's how people become rich in the market. You can't just invest, you can't be sequentially of investing money, but not for a long period of time. That doesn't work. But then again, you can't invest for a long period of time, but not sequentially add money. That doesn't work either. You need to do both. You need to invest regularly and be invested for a long period of time. That's the point I'm trying to make. So right now, if you're thinking about timing the market, I've proven to you that the stock market over time, over the last 100 years, it goes up an average about 10%. 100 years. We talked about World War I, World War II, the Vietnam War, the Great Inflation. Over all that entire time period, the stock market has gone up on average roughly 10%. So the point I'm trying to make is you don't need to wait. You can begin investing now, worry free, because you know over time the stock market will generally go up. And like I said, don't run and put all your money in the stock market. When you're investing, you buy little bits at a time. You like this company, you buy a little bit here to start. If it dips, you add more. Dips, you add more. Dips, you add more. And you regularly do this with different stocks, different investments. And that's how investing should be. It's not, oh, I have $10,000, $20,000 sitting around. I'm gonna go dump it all in this like one stock that I see. No, that's not how it works. You take baby steps, move slowly, and eventually you're gonna see your account grow to $10,000, $20,000, $30,000, $50,000, $100,000 before you even know it. So like I said, guys, just be consistent and look for the long term, and you should have a lot of money come around retirement.